day, my name is Christel from Frans, Klerk, Independent Technical Analyst. Nvidia is the first one on our list, and we can clearly see that this share that obviously promoted artificial intelligence and their technologies and what they can do has taken to brand new records high. But the week of the 21st of August, a possible shooting star candle has formed. It's a candle that appears at the top of a rally with a long tail at the top, implying that this might be the top of the share for now. The negativity around a shooting star, however, will only be confirmed when it's followed by a bearish type of candle. Now, we'll only know what that candle will be like on Friday's close because these are weekly graphs. Something else I want to note is that we might be sitting here with a possible double top formation, assuming that we'll see some pullback. Now, the double top is a warning formation, also implying that, listen, the share might see profit taking first before it continues maybe to rise to higher levels, or that this might be the top of the share price. Confirmation of negativity or confirmation of the double top will only be confirmed once that neckline changes into a resistance, and that is waiting at $403.11 US cents. Below that level, that double top formation will be on the table. We can assume that $480.64 is the clear resistance. As long as the share remains above it, we can assume that the momentum to the top is in place. My stochastic is in seriously overbought territory, has been for a long time, but now it's pulled back slightly and has turned around with a positive divergence, where that blue line has broken upwards through the orange line, and that is seen as positive, but yet very risky. Why? Because we're very close to overbought levels, and overbought means that the probability for a pullback is more likely. However, it doesn't mean that if the share can attract more buyers, that it can continue to rise above that $480 level into higher levels. If we go back, we can see that shooting star is the all-time record high for Nvidia, waiting at $502.66. Clear resistance. Once the share starts to trade above it, we're in no man's land territory, and then we can use Fibonacci levels to identify where my next strong resistance is that the share can aim for above that $502 in, and that is if my internet can work with me. Nevertheless, you can use Fibonacci levels, use a recent high to a recent low to project where the share price can go to once that $502 starts to change into a support. Next one on our list is Woolworths. Let's start on our local exchange. Also a share that outperformed the food retailers. A really strong upside. Woolworths. We can see that the clear resistance on Woolies is waiting there at, if I need to get as many touching points as possible, 80 Rand 56. Above that level, we can expect brand new record high on Woolies, right? My 40-week moving average is a beautiful support waiting at 70.38. That means the momentum to the top is in place. But also have a take note here. The share has pulled back. My stochastic pulled back. It's still in overbought territory, but it looks like that blue line wants to break upwards through the orange line, and that is seen as positive. But it's a risky place to buy a share, right? Because it means the probability for downside is more likely. However, how do I project where the share price can go to? I can take recent highs and recent lows and project where the price can go to above that neckline waiting at 80 Rand 56, that resistance. And that means my next target for Woolies, assuming that the momentum to the top continues, waits at 94 Rand 30. Keep in mind, nothing goes up in one line, right? It's going to move up, pull back, move up, pull back again. But I think the critical level that needs to remain in place before we can think about 90 Rand is this strong support here, which is not far away, and that is the week of the 21st of August, that low of 74.61. If you are a momentum chaser, never recommend it. If you are, That is the critical level on the weekly graph for Woolies that needs to remain in place in order to sustain the momentum to the top. Discovery. Ticker DSY, also listed on our local exchange. The share is caught within this rising wedge formation. Now, a rising wedge is a negative formation should that lower band change into a resistance. And take note how close that lower band is weighting to the 40-week moving average, weighting at 141 Rand and 9 cents. My stochastic has already broken downwards with a negative divergence, already sitting on about a 59.56. So should they be able, Discovery be able to attract enough investors, the share price can maybe go up and test that upper band again and pull back. But the warning will be below this lower band of the falling wedge. Because once this lower band changes into a resistance, the negativity around it is confirmed. Now, what is the target of the wedge, a rising wedge? We normally take the mid zone. The textbooks say you should take the tail if you're greedy. And we project it downwards from where the neckline will, or the lower band will be confirmed. And that means it can possibly go back to 111 Rand 41 should the momentum to the bottom continue. But we can see that the 40-week moving average, that long-term sentiment gauge meter, is an important level on Discovery. As long as that remains a support, and they've tested it here back in May already, then the momentum to the top can continue, waiting at 141 Rand and 9 cents. Amazon, one of the favorites in the US that treated investors very, very well. But one, the share is was extremely overbought, has already pulled back with a negative divergence and sitting on a 64. If I look at my candles, the heartbeat of investors that highlight what do they think of the share, we can see that recent high in the week of the 31st of July is where the main optimism basically has come to an end. Because ever since then, the share has started making recent lower highs, and we can see clear momentum to the top. Now, I want to highlight three very important candles, and it's these three candles because they can confirm a evening star formation. Evening star formation is a 3-candle pattern with a bullish candle, a doji type of candle, which is this middle one, and then a bearish type of candle again. And below the support of either the real body or the shadow, depending on how many touching points you get, below that level, the negativity will be confirmed around. And the evening star says, listen, the day is behind you, the night, the difficult times, the dark times is going to be first at hand. And that strong level of support, it's waiting at $126.41. Below that level, the evening star formation will be confirmed and we can see lower levels. However, above that top there, above $143.63, we assume then the momentum to the top can be in place and we can see higher levels. And you can use your average true range indicator, but you can use that as the resistance. Create some breathing space with your average true range indicator and then use that as a stop loss. But below this low, we can expect a downside. And especially with this overbought indicator, we can maybe first see some profit taking and then maybe upside again. My 40-week moving average is waiting at $110.20, which means the long-term sentiment towards Amazon is still positive. However, that we might see some profit taking first before we can see upside again. Don't forget to send through your request via email admin@fransdeklerk.com or Twitter for next week's recording. Have a fantastic week. Take care.